Now, there are many good reasons for investing in the real estate market in Vietnam, and today I'm going to give you 10 of them. I'm also going to give you some disadvantages and my conclusion at the end. So my first reason for potentially investing in Vietnam is population growth. So in 2021, the population of Vietnam was 98 million, but by 2035, it is expected to grow to 106 million, and by 2050, around 109 to 110 million. Thereafter, it is expected to decrease. And these are figures produced by Macro Trends. But if you look at other websites, you actually see that the population is expected to grow more than this. But I've gone for the more conservative estimate. However, if we look at Ho Chi Minh City and Hanoi, the actual rises in percentage terms are much larger. So Ho Chi Minh City, the population is around 9 million, but by 2035 it is expected to grow to over 12 million, and Hanoi population is currently around 5 million, but by 2035 it is expected to grow to 7 million. So this is good for the real estate market. I also want to add that the population of Vietnam is young. Number two, let's look at spectacular growth. So from 2000 to 2019, every year GDP growth was above 5%. And even in the pandemic year of 2020, GDP grew by nearly 3%. Now that is spectacular. Number three, I want to talk about the low total government debt to GDP. For a number of years, this has been below the 50% mark and is around 5 times lower than Japan. Also, Vietnam has very low unemployment. Number four, I want to talk about rising tourism. So Vietnam has seen spectacular increase in tourist numbers. And these numbers actually trebled from 2010 to 2019 before the pandemic. So absolutely spectacular growth in tourism as well. Number five, I want to talk about the increasing investment from abroad. Now, as China falls in popularity for foreign firms because of higher costs, more regulation, weaker growth, and a potential trade war with the US, countries like Vietnam and Cambodia are benefiting the most as they are seen as more promising markets with greater returns. Now, my number six reason is rapid improvements in infrastructure. So we have seen rapid urbanization and fantastic growth in infrastructure projects in Vietnam, and I think this will keep pushing prices up in all the major cities like Ho Chi Minh City and Hanoi. Number seven, I want to talk about the very low buy-sell costs. So between VAT, registration fees, notary fees, you are looking at less than 6% buy-sell costs. That is extremely low. And I haven't included real estate agent fees because in Vietnam, most property is bought and sold through word of mouth. If you were to use a realtor, expect to pay 3% commission. However, you will lose access to many properties if you use just realtors and don't look for property yourself. Number eight, I want to talk about relatively low taxation, although it's not incredibly low. So we have no wealth taxes. When you sale of real estate, you have to pay tax 2% of the gross proceeds. Inheritance tax is 10%. VAT is low at 10%, and rental income tax is 5% VAT and 5% personal income tax for an annual rental income over 100 million Vietnamese dong. And 100 million Vietnamese dong equates to about $4,400 US. In theory, many landlords don't pay the authorities rental income tax, and it has been standard practice not to do that, but they are now starting to climb down on this. They are cracking down in a big way, so please do pay your rental income tax in Vietnam. Number nine, I want to talk about reasonable prices and yields. I mean, the prices are not particularly low, but they're not high. So Ho Chi Minh City, you are talking on average about $2,700 US per square meter, and Hanoi between 1,600 to 1,700 US dollars per square meter. And if you do your homework, you can get 5% to 7% gross yields according to JLL Vietnam. These are rough estimates though, so you need to do a lot of homework yourself, due diligence, and you really need to dive into the numbers when you do go to Vietnam. Look at property, look at how much rental yields you can get. However, it is generally accepted the yields are okay in Vietnam. They're not the best, but they are quite good. And number 10, I just want to say buying in Vietnam is reasonably safe. So government keeps a well-maintained register on property. There was a new law in 2015 as well that has made it easier for foreigners to buy real estate in Vietnam. However, I want to talk about now some major disadvantages and what I think for me is a bit of a deal breaker. So, owning real estate is not as straightforward as you think in Vietnam. In effect, you own a structure on a plot of land, but in effect, you are renting the land from the government for a period, depending where you buy, of 50 to 70 years. Now, people who've watched my videos about the UK will be familiar with the term leasehold. In the UK, you can pay to extend the lease, but the question is, will the government renew the lease once it's expired? Let's assume they probably will, but it's not 100% certain, because we must remember Vietnam is a one-party state that is led by a communist party. So again, if you're not sure about what leasehold and freehold property is, do look at some of my videos on the UK where I go into more detail. Also, I want to talk about the birth rates. Now, as I was saying, in Vietnam, population is expected to grow for many years ahead, but then slightly expected to decline after that. And if we look at the birth rates, Vietnam's birth rate in 2021 was about 2.03. But looking at other countries like Cambodia and Philippines, the birth rate is much higher. So here we're looking at about 2.47 for both Cambodia and Philippines. So this would suggest that perhaps Cambodia and the Philippines are better for the very long term if you want to put your money in the real estate market. Now, number 3, I also want to talk about other restrictions when it comes to buying property here. So foreigners are collectively allowed to purchase a maximum of 30% of condo units in a building and 10% of properties in landed projects. So this is another restriction on foreign buyers. Also, I want to talk about bureaucracy. So Vietnam is quite a bureaucratic country, and it's more bureaucratic than countries like Cambodia, the Philippines and Malaysia. And finally, I just briefly want to talk about the currency. Now, although the Vietnamese dong has been steady against the US dollar over the last few years, in 2019, the US government actually said that Vietnam was manipulating its currency. Now, the issue has seemingly been resolved, but it has left an issue of distrust when it comes to currency manipulation in Vietnam. So I've given you some positives, some negatives. What is my conclusion? Well, perhaps because I've covered and I know a lot about the UK market and this leasehold business, I think there are better markets than Vietnam, such as the Philippines, Cambodia and Malaysia, where you can own property on a freehold basis. So my conclusion would be I would probably not invest in the real estate market in Vietnam. That said, this should not stop you considering investing in the Vietnamese stock market. In fact, it's done amazingly well in the last few years. So you would have done incredibly well in the stock market. Of course, you would have done well in the property market, but I think it's just that point on not being able to own the freehold which would put me off. Anyway, that's it for today. Thank you ever so much for watching. If you like this video, please do click the like button. If you like my channel, please do subscribe, and I'll see you very soon on the next video. Thank you and bye for today.